With all this uncertainty surrounding the financial markets, what can you do to keep your head above water? Well, here to give us some advice is from a woman. She's called the Money Coach. Lynnette Khalfani-Cox is a personal finance expert. She's the author of the book Investing Success: How to Conquer 30 Costly Mistakes and Multiply Your Wealth. And she joins us live from New York. Lynnette, it's good to see you.
Thank you.
Very interesting times indeed. We're watching our share prices fall. Credit is tightening. There's also the specter of inflation out there. What can we do to protect our nest eggs?
I think the number one thing for investors to realize, whether you're investing in your 401k for retirement or you're just buying individual stocks, funds, things of that nature, is don't panic. This sounds like very commonplace advice, but it really goes against the grain of human nature when you see the Dow swooning 500 points one day, 450 points another day. The inclination for most people is to bail out, is to say, I've had it. I don't want to play this game on Wall Street anymore. I'm taking my money and going home. But that's precisely the time you need to hold still. You need to not panic and sell into a down market.
Okay, so hold tight, don't sell. But what about buying opportunities in terms of equities? Is now a good time to average down, to buy depressed shares so the value eventually averages out over time?
Absolutely. Well, I'm constantly encouraging people to consider dollar cost averaging. That's essentially saying you're going to commit a fixed amount of money to the financial markets every single month without fail. You take a look at your budget and you decide, I can invest $200 a month, $400, $1,000, $50, whatever it might be for you. But then you say, no matter what happens, I'm going to stick with this investment program. When you have dips in the market and big declines like we've seen the past week or so, what happens is you're buying shares at a lower average price point. And that's good for you in the long run. That's giving you more upside opportunity. The problem when you sell in a down market or when you stop your investment program is that you never quite know exactly when the market is going to turn around. Nobody has a crystal ball. And so let's say the investors who bailed out on Wednesday, they missed Thursday's huge upside where the Dow Jones Industrial Average ended up more than 400 points. So the key is to sort of master the fear factor and to not dump out prematurely. It's a whole nother ballgame if you're, at or approaching retirement. Then clearly you have to get a lot more defensive in terms of your investment strategies. You have to be a lot more conservative with your cash. And I think that's a time to move more into bonds as opposed to equities.
Yeah, and it's interesting you mentioned bonds because bonds, they did fall overnight on news of a possible U.S. government bailout plan, but it is considered a safe haven. Bonds, gold, are they still good opportunities for us right now?
Absolutely. Now, we can talk about yields on bonds. We've certainly seen a huge flight to quality. A lot of investors seeking the safety of U.S. Treasury securities. The 3-month Treasury bill, it's returning, the yield on it is a very paltry, about 0.25%. But the fact that we're seeing so much activity and so many investors trying to buy this government debt, which is, of course, backed by the full faith and credit of the U.S. government, the fact that we're seeing so much demand there shows you that people are saying, I'll take a very, very tiny return. I'll take a little something rather than risking losing 5, 10, 15, maybe 20% of my investments. So we're seeing a big demand for Treasury securities. Gold is also surging right now. This week, gold hit more than $900 an ounce. On Wednesday, we saw gold surge, the biggest dollar gain it's ever seen, more than $90 an ounce. So that's obviously speaking to the fact that gold is considered a commodity that's a safe haven. It holds its value. It's a hedge against inflation. So investors who are well positioned might also want to take a look at that investment opportunity as well.
All right, so flight to quality and don't freak out. Just stay in the game. I got your advice.
Absolutely.
Lynnette, thank you very much indeed.